Do you think that there's something changing here on the risk management side for folks?
I think appetite for risk in the markets has just never been stronger. I think we are just in a new era when it comes to risk taking, risk management, appetite for risk. People are hungry to bet big on stocks, sports, options, prediction markets. It's unlike, anything I've ever seen during my time at the Wall Street Journal. I certainly wasn't investing or covering the tech bubble or the global financial crisis, but I have followed the trajectory of individual investors since the meme stock mania. And I think levels of risk taking in some ways are above 2021 levels this year, just in terms of the sheer leverage that we're seeing in the markets. And, by the dip, the strategy that you're saying you tried to use you know, in the 90s, early 2000s around the tech bubble, it's morphed into a viral stock market sensation. Like it's become this like larger than life rallying cry for many individual investors who staunchly believe that they should be buying on every single dip in the market.
hmm Right. But again, a lot of that is prefaced on that you have to be doing selling, right? You have to get that cash from somewhere. So you have to be, selling at some point. And I guess,
Or
and
keeping some cash on the sidelines,
right, or
right?
keeping some cash on the sidelines,
Yeah.
absolutely. And again, I wasn't really buying the same stocks on the dip. I was buying a whole host of new stocks. Whether it was defense ahead of the Iraq War or what have you. But one of the things now, and maybe not so much anymore, but for a while there were some very strange vocabulary being used, like diamond hands, hodl. It was almost like we don't care how much it goes down. In fact, one of the things that was the strangest to me was people bragging about how much money they were losing. Kind of this, almost like a badge of honor of how much money they were losing that they would post. So again, I guess that's where sometimes the risk management side seems a little weird to me, where there, there just doesn't seem to be a risk management plan. It's just kind of like, no, it'll come back eventually. It's going to the moon, and I don't want to lose my position, so I'll hold no matter what. Is that something you're still seeing?
We have seen the rise of the so-called degen trader the past few years. And, that word, it's unclear where it comes from, but some people say it comes from degenerate gambler and kind of lionizing the big risks that gamblers take. So yeah, there's a lot of crypto options, stock, leveraged ETP traders who pride themselves on being degen traders and, just walking into taking big risks and being able to withstand these like stomach churning moves.
hmm And why? I guess I guess that's the other question. Like why? Because
Yeah.
again, I look, I'm 50. I'm looking at this as retirement. I don't have the runway to mess around and just wait for hopefully
Uh-huh.
things to come back. And again, I take it as my retirement pretty seriously. Like, why do you think that there's kind of this degen thing going on where it's like almost like a lack of seriousness. And I think that's where maybe sometimes the older generation is looking at the younger generation and like, you guys aren't treating this seriously, type thing. Where do you think that comes from?
I think there's been a cultural shift, right? Taking risks is lionized and it's been rewarded. And just think
hmm
about all these crypto millionaires out there, right? And it seems like they took big risks and kind of struck it rich overnight. So I think
hmm
a lot of people see the crypto millionaire next door. There's a lot of FOMO associated with that. You're only seeing the wins posted online. You're not really seeing, you know, the ugly drops.
hmm
So there's a lot of FOMO and then I think yeah, I think social media does fuel some of this.
hmm Well, and certainly we have to, because you mentioned how many new investors there are. And whereas the great financial crisis seemed to have cleaned out a lot of people, where they're like, "Oh no, I'm not doing this anymore." I have no appetite for the market going down 57%
Yeah.
and for stocks that had been around for 100 years like Bear Stearns and Lehman Brothers just going belly up. So there was kind of this pendulum swing there, and then it seemed like with COVID you had all of a sudden all these people at home kind of like, oh, well, what am I going to do? from home to make some money while I'm not, necessarily working. And all of a sudden, you have this, rise of the investor. So, do you think it's not until we get I mean, and look, 2022 was no walk in the park. That whole rate hike cycle certainly devastated, a lot of people in the market. It was just so long and prolonged, and especially with the small caps. But do you think we need almost like um, a crisis in order to get risk management back on like normal ground?
I always think of what Warren Buffett said at his last shareholder meeting, where I think he said something like, "We haven't had a true hair curler event." Like, he doesn't think we've had really a true crisis era for the stock market in quite some time. He does not consider Liberation Day that crisis era. However, a lot of people thought that higher interest rates in 2022 would quash some of this behavior. Um, it didn't, right? And in fact, this, it's just been rewarded to keep piling into the market and to keep buying on every single dip. I do think there's an element of this younger generation that's come into the stock market. They've largely known blue skies, right? To your point, they have not seen the global financial crisis where it took years for stocks to bottom or recover. Stocks bottomed so quickly during COVID. 2022 was a bear market, but it certainly did not feel like a global financial crisis.
Yeah, no, absolutely. It was not as
Yeah.
sharp. It was just more prolonged,
Yeah. Yeah,
which
so young investors have had it just really good, I think, the
mhm.
past few years. It's been a great time to be an investor.
Mhm. Another thing that you brought up again, just speaking of the tariffs and Liberation Day, I was either reading something of yours or watching you on something, and we tend to stay away from politics. We just care about, hey, how can we make money from the market? Who cares about the politics side? But you did bring up this whole red goggles, blue goggles thing, and how much do you think, especially with the polarization, that we've had in the political sphere, how much do you think that the politics, or whether you think Trump is right on stuff or whether you think he's wrong on stuff, is really, and it's important to have a thesis, but how much do you think it's clouding people's judgment in terms of how they are actually doing their investing?
I think it's clouding people's judgment, in terms of how they approach their portfolios more than we've seen in years. I was actually looking at some Gallup data that showed that how you viewed the president, how you viewed Republicans versus Democrats had a ripple effect into whether or not you were bullish or bearish on the stock market over the next year. So it's impacting the way people invest. And I saw that firsthand when I was interviewing people around, Liberation Day, where, people who had kind of soured on Trump or were not fans of his policies, they said they were maybe selling stocks, hedging exposure, which was really interesting. We have this political polarization that shows up in consumer sentiment data, shows up in voting data, of course, is now showing up in investment data.
hmm Yeah, no, that is very interesting. And since you bring up consumer sentiment, I guess as you're looking at some of these numbers, one of the things that strikes me as a little odd. Again, there's a lot of talk about the weakness of the consumer, but yet. I'm looking at a lot of stocks in the retail area. A lot of data is coming out in terms of what people are spending, and there seems to be a disconnect. The consumer doesn't feel confident, but they're still spending, so where do you think that disconnect is coming from?
I know. I mean, I think it's really tough to say. It seems very vibes based sometimes, right?
Mhm.
In terms of how people are viewing prices and how people are viewing spending right now. But it seems like that's been the case for quite a few years now, where people are, balking at the price of eggs, balking at the price of vacations, but they can't stop booking that trip to the Caribbean.
Right. And are you seeing any data in the credit usage space that is maybe suggesting that there the sacrifices aren't happening, and again, there's maybe trouble down the way?
I think since what we are seeing is that since the COVID-19 pandemic in 2020, Immediately after that, we saw some tremendous gains in wages among low income workers, right? And it
Mhm.
felt like people like servers and waitresses were seeing these giant wage gains, and it was helping close the gap a little bit. But now that's taken a big turn. We've seen wage gains cool, and at the same time, we're seeing inflation kind of eat into some of those wage gains.
Right.
And that's leading to what a lot of investors I've been chatting with keep pointing to this two-track economy that we're in terms of this divergence between the haves and the have-nots.